Hello, this is Bob Joyner, and in this video we're going to be taking a look at the SPY, and today we're going to be looking at breakout patterns and how to identify and trade those patterns and what to look for in reversal patterns so that you can stay with the trend. Alright, in today's video we're going to take a look at the SPY, of course, and we're going to look at the patterns from Wednesday, the 3rd of July 2024, and we're going to talk about something that happened in pre-market. And just to set you straight here, we're looking at a 26-minute chart on the far left, a 1 minute on the middle, and a 5 minute over here on the right. Okay, and I'm going to draw a box about the area in question down in here, so you can see I've drawn it over here on the 5 minute chart, and it shows up over here on the 1 minute chart as well. And it shows up on the 26-minute chart down here in the far left bottom. So a couple of things that happened, things that I track on the charts. One is I use what I call a 5-minute half line, and I usually put that as a blue line on the charts, and I try to keep it updated all morning long, so if you're trading live you can see where these lines are. Of course you can do it on your own, but that area right in there, you can see where price continued to pop up in that area in pre-market and hit resistance, but the move down was not that big. You can see 549, 548.50 down to about 548.35. Not a very big move if you're looking at day trade, but it's an area to watch. So we're watching that blue line. We're watching what price is doing as it continues to debate that area, and we know it's going to go one way or the other, right? It's going to break out this period of consolidation. So how do we measure the breakout? How do we decide when it's a breakout? Well, of course you can just use price action, and you can see price eventually moving above that area as it breaks out in this area right in here. And one of the things it does is it breaks above that blue line, and for those who are using my system, that's a 5-1 3Q reversal. Okay, so I'm going to push the chart, the 5-minute chart, over a little bit so we can see what happened after that point. So after we had that 5-1 3Q reversal, you can see a couple different things happened all at the same time. So I want to point that out and get rid of this yellow circle just for a second so you can see this. On the 26-minute chart, I've got Heiken-Ashi candles over here on the far left. I've got Heiken-Ashi candles here on the 1 minute, and I've got Heiken-Ashi candles over here on the 5 minute. So as we move above this 5-minute half line that I just mentioned, that big red candle there that we debated, and we finally broke through. One of the things that happens is at that area, I'm going to draw another line right in here, and if you look at on the far left, if you can squint and see it there, you'll see that that is the point where that 26-minute had a what I call a Heiken-Ashi trend change, and that means it's a change in the color and the structure of that 26-minute candle. Right at that green line, we have a change in color. It goes from red to green, and a change in structure. It goes from a closed red candle to an open green candle. So it's an easy thing to spot, easy thing to watch. But what happens after we get above that green line and we're above the blue line? If you look, we've got green candles on the 26-minute, green candles on the 1 minute here. We break that out a little bit more, and green candles on the 5-minute chart. And what you're doing at that point after that breakout occurs, first off, let me mention a couple other things. Other things that happen during that breakout. The 5-minute Chiku, which is this orange line right through here, breaks back above the historical price curve. If you go back and look, you'll see where it was below that historical price curve in pre-market, but as we break through, the Chiku span comes back above the historical price curve and stays above it for quite some time there in the morning session. Another thing that occurs is we get the CCB, which is down here in the middle panel bottom. You'll see how that becomes bullish as well. So if you have all these confirming patterns, Chiku crossing above the 5-minute half line, the CCB down here at the bottom moving back above zero, you have a 5-1 3Q reversal, you have green everywhere you look, right? So once you have all that, there's only one way to trade, and that's long. What I wanted to show you is that at that point you know which way you need to be trading. So if you are short because of pre-market activity, or your assumptions about the market, your assumptions about how to interpret the morning's economic reports, and you see price structure and changes such as this nature, you know that you got to get out of that trade, whatever the loss is, as quickly as possible. As quickly as you see that trend change, you got to get out of that, and you got to start and go long, right? Do a stop and reverse, whatever it takes, as soon as possible. Because these changes, when all those things line up, it's unlikely that it's going to change really quick. Alrighty, hope you enjoyed that video. I'm going to try to do these more and more often, as much as possible on a daily basis. These will be short 5 to 7 minute videos where we look at the technical analysis of day trading the SPY. And of course you can use SPY as a stock. You can trade it as an ETF. You can just trade it as an option. Puts and calls, simple puts and calls on a day trading basis. You can use 0-day expiration options if you choose, and you can also use the SPY chart to trade MES futures, especially, for example, if you're trading with a prop firm. Hope you enjoyed the video. Please like the video, make some comments below, and we'll see you next time.